Hello and welcome back to Beating Forex. This is a channel where we talk about matters trading and we learn a new lesson every Monday to get us closer to become better Forex traders. If we just met, my name is Doreen Nguma. I'm the host for this channel, and today we are going to be discussing the types of Forex traders there are and the types of analysis. We are going to narrow down our title for today in two segments, and this is going to be very interesting, and if you're interested, kindly watch till the end. So let's begin the first segment. The first segment is going to be the types of analysis there are, and these are going to be narrowed down to two major groups. The first group is the fundamental analysis, and the second group is the technical analysis. So let's start with fundamental analysis. Fundamental analysis is analysis of a market depending on the economy of its currency. So that is example like knowing the dollar is going to be selling because the US economy is becoming stronger. So that these kind of analyzers have to be very keen with news, especially business news, and they also need to know about what is going on around the world. The second one is technical analysis, and this is analysis of price movements. It uses the trends and patterns of the market to help us know the profitable opportunities and the entry points. So for you to become a serious and a good Forex trader, you need to have the both of them. You need to be both a fundamental and technical analyzer. That way you can look at all hints there are in the market, and you can know when to get the most profitable trades. Segment number 2 is going to be the types of traders there are, and these are I'm going to be giving you 5 types of traders there are, and maybe you can slot yourself amongst one of them and now become that type of a trader. Now the first type of trader is called a scalper. A scalper is a short-term trader, and they hold their trades in less than 30 minutes trades. So they open and close trades when the markets are most liquid, and they only trade during the day. So they open numerous amounts of trades within the day and make their profits before the day ends. So the pros of this kind of a trader: one, you can make a lot of money because you only trade when the market is liquid, and so it's very normal for this kind of a trader to only make profits because they only trade when the market is liquid and when they see the opportunities. The con about these traders: you have to be very alert, you have to be very instinctive for you to know when to get into the market, and it needs somebody to be at least socially under pressured, and it needs somebody to be socially under pressured. So if you're busy at work and if you have busy schedules during the day, this is not the kind of trading style that you may be using. The second type of trader is going to be a day trader. This is where I belong. Day traders trade only during the day. They do not hold trades overnight, but they do not open small trades like scalpers. They have trades between an hour to 4 hours maybe, but they do not hold trades that go overnight. The advantages of this kind of traders is that you get a lot of money. It's possible for you to get a lot of money because you only trade when you see profitable opportunities, and long-term news that happen during the open and close of the market, they do not affect you because you only trade during when the markets are live. The pro about these kind of traders is that the news that affect open and close time of the markets, they do not affect this kind of traders. And the negative thing about it is you have to be keen, and you have to be knowing what is going on. So the third kind of trading styles, or that kind of trader, is the swing traders. Swing traders open trades that are longer than a day, maybe between a day and a week. And the advantages about this trader is that you do not have to be very keen during the day looking at your market. The disadvantage about the swing trader: news that happened within the period of open trades could affect the trades negatively and give them big losses. So the trading style number 4, or the trader type number 4, is a position trader. This is normally for institutions and banks, and these ones trade long term. They go even a year, a week, a month. They go past a month to a year. So the fourth trading style is the position trader, and this mostly is for banks and institutions, and these hold trades, and these ones hold trades past a month to a year. So advantages of this is that you can get a lot of money because it's a very long-term trade, and disadvantages about it can be affected by news that could happen within the open market period, and also one needs to be very high with analysis, and they really need to know what they're doing. Another disadvantage of being a position trader is that you have to be very patient because money is held there for quite a long time. Trading style number 5 is the algorithmic trader, and these ones use it's computer-based trading. So that you have like sort of a robot that opens and closes the trades for you, and you're not directly involved in your trades. Yeah, and then the last and not least are the event-driven traders. These traders only trade during the news, and they look for serious news, for big news like the NFP, that's the non-farm produce.